What happened? Thanks for tuning in to Talking Point today. I think it's apt that we are talking to our guest on the show today simply because it's important to decode how the behavior of the market has been. Now, uh, I'll tell you the last time, not the last time really, but when the crisis and the fear of the crisis started to hit its peak in the Indian markets, this was on the 9th of March or the 8th of March. I don't exactly remember, but around that date is when we spoke to Atul Suri on BloombergQuint. At that point of time, he had said trying to pick a bottom amidst the volatility is dicey. Well, was sage word simply because from those levels, when the Nifty was at 10,374 at that point of time, it went down all the way to 7,500. It's coincidental, I must assure you, that the Nifty is again around those 10,374 levels. And we have Atul Suri back again to talk about what he thinks could the course of the markets be over the course of the next few days, weeks, months. Atul, clairvoyant, I must tell you, you were back then. Good morning. Thanks for joining in.
Morning. Morning.
How are you feeling about the markets in your new look?
Ah, okay. So essentially, it's very interesting, and this whole thing has been so global in nature, Neeraj. So one was the month of March, March, really, where you had actually a global meltdown, and it was kind of unanimous. About 40% is a number you can place it, plus or minus a few percent. India fell about 39%. The Nifty did, but and that is a point of panic. It all happened in 1 month. But the important point is that what have been the 3 months? So as we stand today on the 22nd of June, we are exactly almost a 3 month anniversary. The 7500 Nifty was about just about 3 months. So let's look
Yeah.
at the market in this 3 month time horizon. Uh, what has really happened is that the pullback has been very, very differentiated globally. Like, for example, the NASDAQ has had a 50% up move and it's actually got back to lifetime high. So that's the strongest market that there is, and US. So I was actually trying to do some work and trying to correlate the number of COVID cases and deaths vis-a-vis market recoveries. The whole problem is medical. So let's do some work on that. So interestingly, the country with the maximum cases and deaths is the US. And shockingly, that market has actually bounced back the most. So people find that there's a lot of mismatch between the real world and what the markets are doing. You can say, well, the US has a special case because they had a very liberal package, etc., etc. So let's discount US. The second country with the maximum number of cases is Brazil, right? So Brazil has a lot of cases. Interestingly, you'll find that Brazil in this pullback is up 46%. And here you never really had that kind of packages, etc. Another country which is at number 3 in the number of COVID cases is Russia. So the Russian market's up 55% in the last 3 months. So interestingly, though this is medical and it doesn't sound right, but the fact is that the markets are more impacted or interested in the economic fallout. And that is why I feel that in this pullback, India has underperformed relatively to a lot of global markets. So if you find ourselves in the pack, we are not in the top section. A lot of other markets have done better. And that's obviously due to the elongated lockdown we've had. And there are a lot of question marks on the quality of recovery or when we open out and post lockdown, etc. So I think that Indian markets, the interesting part is that our economic impact or the stretch of this second, third, fourth lockdown was a bit detrimental. But the interesting part is that in case, as I say, let's see the glass half full, half empty. So let's see it as half full. In case we are able to pull out of this lockdown successfully, I think we have a lot of catch up to do. So that is where the opportunity is. So one can be disappointed, yeah, that in the last 3 months, compared to a lot of other markets, we have been relatively underperforming. But the fact is that we've also had a very elongated lockdown. So in case the opening up happens and it's encouraging and will take the next few months, so we may actually be the case for a very good catch-up rally. So a lot depends on how we come out of this lockdown. And that's why I think the next 1 or 2 months are very, very crucial for India. So that's really summing it up. Last 3 months, India has relatively underperformed. A lot of countries have done much better. But I guess there are a lot of questions on how we are going to come out of this, because there has been a bit of disappointment in terms of this length of the severity and the kind of package that came.
Okay. Well, lots of questions that I can ask you based on this answer. So let me get started. First, almost not almost everybody, but a large section of the market, Atul, views this rally, even if not from 7,700, then let's say from 9,000, where we've
Yeah,
almost had a one-way run of sorts, save for a day or two of a pullback, with disbelief. And there are various charts and various economic statistics thrown saying that there is a disconnect between the markets and the economy, and therefore the market should fall.
right.
You are a veteran, right? When it comes to screen trade, screen reading, charts, maybe a bit of fundamentals thrown in. What does the screen tell you currently?
So what happened was that we had a very similar situation in 2008. We had a very big financial market crisis. There was a meltdown, and the US, not as fast as it did this time, but with a bit of lag, went in for massive quantitative easing. And the markets in 2009 also bounced up. And again, the same question was raised that, hey, your markets are bouncing back, but the real economy is way below. But what happened was that this infusion of liquidity over a period of time also healed the underlying economy, and the economy did a bit catch up. So the markets were not wrong. This time, what has happened is that I think the US Fed has been very fast. I think they just did it in a month. And that has led to a lot of liquidity flowing to equity markets or all capital markets, and the
Yeah,
markets have bounced back. Yes, the fact is that the underlying economy is nowhere there. I mean, maybe 50% off from there. But the fact is that, as I said, the next 2 to 3 months are very important because countries are coming out of the lockdown. Going into lockdown was easy, passing in law was very easy, but reopening. So I think that this reopening, whether it's in the US, more so in India, because of the extent and severity of lockdown, is going to be a detrimental factor. Just because the markets have gone up and underlying economy is bad does not mean that the underlying economy can actually catch up, assuming it can surprise you on the upside. So there are a lot of, so March was a lot of bearishness. If you heard, the vaccine, the vaccine WHO said is 2 years, 3 years, that's the process it takes. And now all are saying we'll have it with millions of doses before December. A lot has changed. Mortality rates, spread. So all these, various models you saw in March were absolutely disaster. Like all airlines will shut down, all shipping will shut down. But the fact is that as tempers have cooled or as the markets have cooled, people are seeing silver lining. So it's not as bad as it seems. So sentiment. Also, the fact is that if you look at your and my WhatsApp or you see some of the news channels, you'll hear so much negative news.
yeah,
I
that's
have
true.
to yet see positive articles or positive news. It's just not there. And when everything is on one side, very often the opposite happens, and especially in our markets. So I think sentiment is bad. We are all sitting at home, locked down. That affects people psychologically, makes them bearish or pessimistic, what you may say.
Yeah,
And I think that's all playing out. So the sentiment is bad. The real economy is slowly starting. But in the past, the markets are forward looking. And the markets are saying that hopefully we would have a catch up of the underlying economy and sentiment, and we have seen it change between last month and this month. I mean, if the problem or the genesis of the issue was medical, and if we say vaccine is the final solution, I mean, I remember last month we were speaking about 3 years to a vaccine, 2 years to a vaccine, and now even the most conservative agency like the WHO says, oh, we will have it by December. And that's a game changer. So essentially, a lot of pessimism, a lot of bearishness. I think it's a lot of sentiment. Markets are forward looking, and I've learned in life not to fight Mr. Market.
yeah, that's true. So then let me ask you, before we get to specifics, what's your you would have an investment portfolio for your PMS scheme, and I will get to that in a bit as well. But what about the trading portfolio, Atul? Are you playing it by the day? Are you playing it by the week? Are you playing it by the month? Are you kind of
Yeah,
take,
I
taking
no
money off?
longer no no I no longer trade, Neeraj. So
Acha, you
essentially, it's
don't trade at all.
PMS.
Okay.
It's the PMS, and it's definitely long-term trend investing, which is our style, which is a combination of being in fundamentally good stocks and optimizing entry exits based on markets. So what
Okay.
has really changed for us has been the shift away. We have gone a little underweight on financials and banks, and we have gone overweight pharma. We did that during the fall, and it worked out well because a lot of pharma stocks held out pretty good, and financials went to sort of underperform. But what we are seeing this month is a very big oversold rally, as so to say. So you'll find that a lot of financials have pulled back. That may have surprised us a bit, but essentially we feel that we would like to be overweight pharma, and that's the theme we are playing out because in the fall we've seen that the sector that fell the least, and in fact actually gained the most, was actually pharma. And we feel that there is going to be a massive, it's just a structural shift that is going to happen in terms of how money is going to be allocated, spent, or pharma as a part of everyone's basket is going to be very, very important. This is also a sector which is very under-owned by mutual funds and PMSs. So I think there is going to be a very big shift from our under-owned sector to equal weight or even overweight at some point in time. So we have been overweight pharma. We've underwent a little bit of underweight in financials, and that's what's panning out. So this month we are seeing a market that's really surprised on the upside. So it's a really the oversold uh, spaces or sectors have actually bounced back. So to put it very shockingly, one of the best performing sectorial or thematic things was the small cap index.
Oh yes.
Small caps have underperformed since 2018. We all know it, but you'll be surprised that in the last 3 months, and more so in the last month, the small cap index has outperformed the Nifty and the Nifty 500. So what you really see is that a lot of these beaten down stocks, a lot of stocks which had almost become penny stocks, have actually seen the biggest bang for their buck. So you've almost had like a 40-45% up move in the small cap index versus the Nifty, which is up 30-35% from the base. So the market is, this month has been this whole reopened trade that is happening, and not just India, it's even the US. Even if you look at the US, the best performing stocks are the airline stocks, the cruise liners, etc. I mean, this whole Robinhood app culture that people are talking
Yeah.
about is all these beaten down stocks. Hertz is a case in point, the car rental company. So you are also seeing that trickle down to India. A lot of retail interest. If you see the number of actually brokerage accounts that are opened have gone up. So I think a lot of people are sitting at home and not much to do, so they're doing a lot of intraday trading. So there is a shift this month. In fact, the move in small caps has actually surprised me and got me actually scratching my head. So we are seeing a very big pullback or a bounce back in the oversold trade. Leaders may rest for some period of time, but that doesn't make a case for me as a portfolio manager to move away from the leaders, quality, things which we think are structural, and try to take an opportunistic 1 month. Because very often it looks very cute, it looks very easy, but very often you get stuck. So if you reallocate your portfolio from a certain model or a method and try to be opportunist, you may feel good for a month or two, but when the cycle turns or when the market's correct, you realize that what you have is a very big drawdown. And secondly is the quality and composition of your portfolio changes. So it's not about performing every week or every month. We may not be in that small cap spaces, but I think it's okay to let it go, because ultimately this is about running a marathon and not a sprint. It's not about being the best performer every month. It's about
Yeah.
performing well across cycles. So I think this month has had that challenge for me personally. But overall, I think it's been good, because ultimately the objective is to fall less and to grow more. And I think that's what we've been doing consistently.
Interesting. So, am I understanding this correctly that India's relative underperformance, and by the way, this month, I think India Nifty and the Nifty Bank has been the best performing index probably globally, but
Yeah.
India's relative underperformance could correct. You see that happening if indeed we emerge successfully out of the lockdown. We can play catch up.
Yeah, that's right. Because the fact is that our lockdown was much more elongated and severe than most countries, even countries like US, Brazil, Russia, where the number of cases were higher. They never really went for a countrywide lockdown. So what
Yeah.
happens is, in India, the lockdown was countrywide across the board. And now people are realizing that the whole shift or the whole division between rural and urban is happening. And rural is not so bad. In fact, that's part of the economy is opening up, and that's visible in the stock movements also. So you'll see, like,
Okay.
a lot of rural facing stocks are doing very well. So I think the market is learning to bifurcate, differentiate, and the next 1 or 2 months will, because of government, whatever it is, at last, when you see the narrative, focusing is on opening out. Even where there are cases, even cities like Mumbai. I mean, we live here and we know that the cases are not. I mean, they may have plateaued out, but it's not that it's started a negative turn. But yet the emphasis is on opening up, and you can see that in economic activity, that there is stop shops opening, or what movement of people there is. So the governments are realizing that more people will die due to the not due to COVID essentially, but the economic and psychological impact of COVID will be much more severe and much longer. And I think that is a realization with governments world over are happening. And that is what is getting reflected in the markets. And that is why the markets are understanding that sooner or later, this the main economy or the underlying economy will have to catch up. It will take a lot of time to get back to where we were in Jan Feb. But more importantly, the trend is important, and the trend seems to be up.
Okay. Um, so that's the big call, and I'm glad I've gotten it out. Now let's try and focus and dwell on some things. I'll get to the small. Actually, let me start with the smallest beautiful argument, Atul. You mentioned that you won't reallocate your portfolio because you got a certain principle about your portfolio management. But for people who are willing to be nimble, I'm just asking if the screen tells you that small caps could actually perform. If it's is it possible that the small cap index, if I can use that term, actually do better than the large caps in the near term? Do you see
Yeah,
that
that.
in the
Yeah. So I have seen that in the last 1 month that the small caps have done better. The only part with the small cap is that remember it's a very large universe. It's a few thousand stocks, so it is a very difficult place to trade in. The risk, it's very easy to get into them. There is a lot of chatter, a lot of you look on the screen, they seem to be on fire, but navigating through this is requires immense amount of skill, and this I can tell you from years of experience. Very often, if you have a little bit of a longer term perspective or time frame, even in the small cap space, it's important to be in quality. Quality does not mean only large cap. Quality is there in
yeah,
small cap also. So even if you are allocating towards small cap, stick to quality, because when the movements are large or the screen is euphoric, we very often, in the greed to make returns every day, every week, every month, we find that we compromise our portfolio. And then when the markets turn, markets are cyclical; they don't go up every time. As and when they correct, the damage that happens is tremendous. Damage in terms of price and damage in terms of the quality and composition of your portfolio. And that's when things totally unravel for you. It's like very beautifully put by Mike Tyson. He's saying that we all have a plan till you get punched in the face. And that's what the markets are all about. So at the end of the day, you will have to stick to your plan and you have to stick to your strategy. So if you are a good short quick trader, then I think it's fantastic for you. The screen is on fire. But if you are looking for a little longer term trends, even if you want to be in that space, make sure you are in quality. And unfortunately, the number of stocks which are even delivering fundamentally in this phase in the small caps are very few, and that is visible from the general distress that there is in that space of the economy.
true. By the way, viewers, if you've gotten punched in your face, I'm sure Atul will also tell you that it's not about how many times you get punched in your face, but how many times you get knocked down and get up again. So keep that in mind. But Atul, one pocket that you briefly mentioned, and I just want to talk about that a bit because pharma, right? It's the talk
Yeah.
of town. Almost everybody says this is the space to be in. But at the same vein, a lot of people who are not that experienced to understand the whole fundamental power of the earnings recovery, if you will, look at it and say that if the stock is actually, or stock that is looking good also has gained 20, 30, 40% already. Abhi to late ho gaye. My question to you is this: when how do you kind of break down this, because the stock is not available at a price that you've already seen, but you do see some future out there. So what is it that you are doing currently out here?
So Neeraj, what how I invest or how I think is not
Yeah,
about that the stock was at 100 and now it's 120. The issue is that is it a thematic or a structural change that is, and this structural change is not about 1 week, 1 month. The fact is that here is a sector which post 2000, it had a beautiful run between 2009 to 15. Post 2015, the US FDA issues and other issues, really you realize that this sector, the top names in pharma had a 30, 40, were down 50, 60, 70%. So everyone was underweight, little loved, little talked about sector. But you will notice that in the last few months, and more so post COVID, you'll find that there has been a surge in this space. And what I think is that there is going to be a structural shift in the way countries are going to allocate to healthcare. Like India, apparently we have what 1% plus of the GDP. I don't the kind of problems we have or the inadequacy that has been thrown up. I'm sure this number is going to go up many fold. And this is not just India. This is across the globe. Countries have been found wanting in terms of infrastructure, and that is going to come through investments. So I think that this sector is going to attract a lot of investments at a country level, at an industry level, at an individual level also. Even today, I mean, in the lockdown, if you walk around outside every pharmacy, you will find a line, minimum 3 to 5 people standing. So here is a thing which, in spite of this problems, is growing. And I feel that going ahead, what was ignored and underinvested in will come back to favor. And that is why I think that it's not about the stock is 10% or 20% higher. The issue is that, do I see the next 3 to 5 years an uptrend? And the answer is yes. It may go up, it may correct 10%. You may have to wait, but that's not what you look at when you're trend investing. When you're trend investing, you look at trends for multiple years. You look for companies which are going to have consistent growth. Consistency in growth is very important, and that is going to get reflected or captured by prices. And that's why I think that pharma is going to be a longer term trend and a theme. And that's why I'm overweight pharma at the moment.
Mm. Some people extended the argument, not in the same vein, of course, to IT as well. Here's a sector with high ESG scores. If indeed the US outsourcing spends increase, then it might be a tailwind. And these companies generate cash flows, etc., etc. If the rupee depreciates, that's another positive. Whether we will talk about the currency as well if you have time. But yeah, what's the thought on IT?
No, I think I agree with you that even when I'm looking at earnings, you'll realize that for whatever it is, see, many industries post this are going to be pretty destroyed, whether we like it or not. They may recover, but not recovering to where they were also. You'll find that there is going to be tremendous, balance sheet destruction, etc. So that's going to pan out. But IT is again one such space, and we are all experiencing it that this they have really not been this whole work from home culture, and thanks to good bandwidths available, etc. A lot of us who are connected with IT or who use IT are pretty much functioning pretty much as normal. In fact, a lot of people have started to accept that we are maybe more efficient working from home and this style. So I think that IT as a place has been a savior for all of us. And as there's no reason why this allocation will not increase. Yeah, the only issue is that what will you pick up? Because in IT, you have a very big basket, you have different models. So if you are able to pick some in the mid cap space, which would structurally benefit post this. I think IT also is interesting, and that is visible in earnings, and that is also visible in the kind of price movements that you are seeing. So definitely a very interesting sector to be in. Definitely.
Hmm. Can I throw in one more sector, Atul, because it's the talk of town, really, telecom. You would have guessed that I won't let this conversation go without talking about that. There is Reliance, which is almost becoming a sector unto itself, but another one and a half players too. How does the fundamental picture, how does the screen, etc., look for this space?
I mean, absolutely. Again, that's another sector where we have our overweight. There is, just as in your house, my house, anybody's house, whoever's watching, I don't know who's watching, but one thing that we have started consuming double in the last 3 months, and that is the bandwidth. Every household, like we had a silver plan, we moved to gold month ago, and now we moved to the diamond and platinum. So every household, the amount of bandwidth that we are using has doubled. And it's not just for work like calls like this or various Zoom calls, it's even entertainment. The streaming that you are seeing, the videos that you see every night, the serials that you see, the consumption of bandwidth is tremendous. So I personally think that, and this is a habit, we've learned through mobile, that once you reach a certain threshold of usage, the usage never goes down, it always goes
Yeah.
up. So I think with the limited players, and now that people have learned that where the lines are drawn, I feel the time is that for this sector in terms of the billing, the ARPUs, etc., to start moving up. And again, as I said, that this is not a 3 month trend or a 1 month trend. These are 3 to 5 year to 10 year trends. So I think that this is another very interesting sector. You spoke about Reliance. I may have a vested interest in the stock, so please do your research. I think that's been the biggest contributor to the Nifty in the last 3 months. I was reading somewhere, it's not confirmed, but 30% of the index move is thanks to that single stock. That stock has almost doubled in the last 3 months. So, it was something around 860, 870. It went to 1700, 1800. So the stock has almost doubled. And Reliance is not a single stock. It is almost a sector in terms of weightage, cloud, and the kind of effect that it has. So there's no getting away that the last 3 months, it is a single stock that is dominated, and that is Reliance. And that is why you'll find that a lot of other frontline stocks actually have not done very well. They have underperformed the index. it is a certain skewedness due to Reliance that you see the Nifty where it is, uh, and that's the way it is. That's the reality.
Yeah, yours. And my math is, I think, correct. Reliance Industries in this, in its wake, in its up move, has added the market capitalization of an entire HDFC bank. That tells you a story. Here's the most premier bank, and Reliance has added that market cap. That tells you a story, doesn't it?
Absolutely, absolutely.
Yeah. Okay, Atul. So you've told us about a few of the internals, but this interaction was aimed more at the larger picture, and therefore one large picture that we've gotten from you is what the index and what the global screen looks like. What about
Right.
the other variables? What about the currency? What about crude? What does the mix of studies that you would be doing tell you about both of these?
So you mentioned currency. So I think the currency has actually behaved very well, and that's credit to RBI. You know, INR has been very very steady between 75 and 77 because that can be a very big external variable for us, and controlling that has been very important because there's one point I want to touch on is the FII flows, and
Yes.
you know that 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 is actually a quite not a very pretty picture. So let us, if you look at FII flows, you will notice that in the month of Feb, March, April, FI sold about almost 70,000 crores in terms of
Yeah,
outflow that there
debt plus
were.
equities. Yes.
Yeah, so that is the kind of outflow that we saw in Feb, March, April. Post that, you will realize that in the May and June months, the total inflows are 23 crores, 23,000 crores. So what we have is only one third of the flows have come back. And even in this, you will find that there are some very big off mark, very large deals like the Kotak deal, etc. So the outflows have been almost 3x of what the inflows are in the last 2 months. So what you really see is that the FIIs have not really come back and pumped money. And that comes back to the original point that assuming we get this restart successfully, there may be a lot of money waiting in the sideline, waiting and watching to really come back. And now, obviously, we have another issue with the whole China problem because it becomes an irritant. It's not something, day to day headlines or some issue that happens doesn't really improve sentiment. So I feel that there is a lot of money that went out and has not come back. And assuming we are able to get this restart going successfully, I feel that a lot of this money could come back, and that is where you will find that the outperformance in the large caps could come back. One of the reasons that I find large caps have underperformed is because FIIs, which generally
Outflow.
tend to be in that phase, have been net outflows. And number two is that Reliance makes the index look pretty, but it is not so pretty among stocks. And a lot of investors are feeling extremely buoyant is because of the small cap pump that there is. So that's really the composition. And if you look at the genesis or the thread you want to start off with when it comes to India or the bigger equity market move, I think you will have to see persistent FII flows coming back, and that is what will really make India do the big catch up trade. Right now, you may see it in a bit of a range. You will see X, Y, Z stocks, ABC themes playing out, but for a larger tsunami to happen, I think that you will have to see these FIIs that moved out in March, April, coming back, and at the moment they are not there right now. So this is something which you really need to watch very very closely for a more consistent and persistent bull market.
Yeah, bits and pieces maybe, but nothing too dramatic.
Yeah.
Any view on crude, Atul, and the resultant impact, if you will, if you kind of correlate that at all?
Yeah, I mean, crude is definitely a very important variable. 2 months ago we had some dramatic falls, and that was more technical in nature. But I look at Brent, and Brent is just above 40. 40 was a very important level for Brent because when it went below, it had a gap down, and when it went below, it kind of collapsed. So right now it's just above 40. I feel that it could head to around 45 or thereabouts. So it could go higher by maybe $3 or so from here. I feel that there'll be a next resistance at 45 or thereabouts, but I don't think crude will run away. It has pulled back thanks to the global restart trade, but I don't feel that crude is going to move vertically. I feel that it could get to around 45 and it could again get a little corrective. But definitely let's not think about the 20s and all those negative carryover charges, etc. Crude, even if it stays somewhere 40 plus minus a few dollars, I think is okay, and as long it won't dominate the headlines. So as long as that remains under check, I think it's pretty good. Rupee dollar, as I said, 75, 77, held on very well in spite of massive FI outflows. And I think bond yields below 6%, that's another positive. So overall, if you look at the other variables or macros, bond yields and currency in India per se has done well. Crude can be a spoil sport, but I don't think it's going to take off big time. The big story, I feel, it may not be a macro, but the return of FIs is
Hmm.
very, very important, because for us that could be the biggest opportunity, and maybe that is what we are missing right
Yeah, and viewers, keep in mind the equity outflows may have looked patchy as well, but the debt outflows have been consistent from the FI side, and that's also a bit of a worry. Atul, one last question on this conversation. I'm throwing it out of the blue at you, but just wondering, what's the most interesting observation around markets, equities, or investing, or some learning that you had by virtue of an interaction on an article that you read? What have you? Whatever. I'm throwing the canvas open, but the most interesting thing for you over the course of the last 3 months.
I've been actually I forget his name. The CEO of Team Lease. I heard a
Uh,
video about him.
Sandeep
So why?
Sabharwal,
Yeah,
Manish
yeah,
Sabharwal.
Manish Sabarwal. I mean, I thought that was a real eye opener. For people like us who equate India to what life is overseas and things like that. I think he really showed me the mirror and realized that how we must look at India with its own yardstick and not sit and compare just because you travel abroad and you see the beautiful streets in Europe or US. You and come back and you compare and get depressed and things like that. Actually, he's made me understand my country a lot more. I look when I look at India, I look at it with a different prism. I look at with the reality of not your GDP but per capita income. And this shift in mindset, I think, has been a very big revelation. So in this whole reading or video watching or whatever, I think this video has actually made me understand India much better. And it's taken away that comparison that I always did with India versus overseas, and started to understand India for its own reality. And the fault is in me, in with what light or with what lens I'm looking. The fault is not what there is. It's just that I fail to understand it. But now, hopefully, thanks to watching this video, I hopefully understand it better. And appreciating reality is great because it is also a form of opportunity. Because as an investor, ultimately, when I understand the reality better, when I'm able to be in sync with what there is better, it makes me a better investor rather than misplaced comparisons. I think it's a sorry for a little subtlety or vagueness of thought, but
It's not.
understanding yourself better makes you a better investor. Understanding your country makes you a better investor. And I think that's for me been a very big aha moment. And I want to thank the author. I don't know him personally, but I think it's done me a lot of good and cleared up a lot of cobwebs in my mind.
Yeah, there's an interview that I think he did with it, and I think which has been widely circulated as well, which was actually quite a bit of a
And then
revelation.
I went back in YouTube and researched and heard a lot of this. There's a lot of stuff available, and of course
Okay.
the point is the theme is the same, but it's just helped me to mentally clear myself and, as I said, understand and appreciate my country much better.
Well, on that note, then, Atul Suri, it was a pleasure chatting with you today. Thank you so much, and
Thanks
well,
a lot.
we'll look forward to talking to you if some of these trends play out. Hopefully, yes, India does
Yeah,
play
sure,
catch up
sure,
because it's much
sure.
necessary as well. But appreciate your time,
Thank you. Thanks, Neeraj. Thank you, everybody.
viewers. Thanks for tuning into this edition of the Talking Point.